Well, good morning, everyone. Welcome to our Friday morning session, TGIF, and all that. Hang on one second. I'm going to get you my monitor. Okay, so the market just opened. We're looking at the NASDAQ here. For those of you new in the room this morning, we have the Hawk Scalper top left, Falcon Swing Trader top right, Eagle Trend Trader bottom left, and the Raptor on the bottom right. I'm also watching soybeans and crude oil on my other market or my other monitor. Very often when we see the markets first open, especially on a Friday, they tend to get busy early. It's almost as though everybody's got their to-do list, and if they can get their to-dos done, then they can knock off early. At least that's how it's always seemed to me. Maybe that's because that's always been my motivation. Get the work done, go home. So let's see here. We've actually got a first micro macro cross brewing on the Hawk already. Now there is a little bit of a concern here because of the higher swing low. Looks like it was fairly active in the overnight, more active than it has been of late anyhow. If I toss a trend line across the top there, if we see the market run back here to this 44.50, 51 area, no doubt we will see some sort of reaction there. In fact, the Falcon giving us an early trend change signal. See, the trend line just changed, but we had this characteristic up, down, up pattern. Not as strong as the, well, I shouldn't say not as strong, more aggressive than waiting for the full pattern to develop. And here too, it looks like we can actually shoot a couple trend lines. We can shoot this one here, which we're dealing with right now, and we can draw the bigger one across the top. You don't have to do trend lines, obviously. I've always liked trend lines. I've always liked the concept of a trend line. I've always liked how the market tends to respect a trend line. There's no harm in putting a trend line on your chart anyway. Well, there's no harm so long as it doesn't confuse you. You don't want to get yourself into a position where you have so much on your chart that you can't make sense out of what's going on. I get people emailing me about different indicators all the time, and that's fine. There's nothing wrong with that. Nothing wrong with putting indicators on your chart. But you will never filter out all bad signals. I don't care how many indicators you put on your chart, you will never account for all bad signals. I think I've mentioned to you my friend Tom Loge, who at one time when he was trading a rather substantial bond fund to the tune of tens of millions of dollars, and you think it's pressure trading your account, He had 7 monitors and 11 different indicators. And he stripped it all down for one monitor and price action. He wouldn't even have a moving average line on his chart. When Tom and I were trading, I was a big fan of RSI at the time, relative strength index, which is a pretty common indicator. It's in everybody's package. But I caught him one time playing with RSI for a little bit because he saw me using it. And like I say, there's nothing wrong with putting an indicator on your chart, whether it be RSI, whether it be trend lines, whether it be Bollinger Bands, whatever. So long as it helps you make a decision. Okay, the Raptor has given us a double pullback into the hard edge. We're not, well, I guess there was a little bit of a gap off of this morning's open. I was going to say we didn't really gap it, but I guess we did a little bit from where we left off. We finished the session, somewhere around this 44.50 area. And we're opening the session a little bit lower, 44.45, 44.44. That may look like an opening gap to this market. I don't know if it'll be enough to actually pull the market in. Much larger gap on the E-mini, relatively speaking. Okay, so here comes the Raptor. This is our first signal coming out of a double pullback. Let's see if I can get an order in here. Oop. Oh, okay. It's not exactly where I wanted the order to go, but I guess we're in it now. That's why I say that with the Raptor, you need to be cautious where you place your orders because they are live the moment you put them on your chart. Unlike the other tools where I can actually engage the order when I'm ready. Okay, so we've got a first micro-macro cross brewing on the hawk here. And I'm going to adjust my entry as the market retreats. Oh, now we're into yellow bars. So that's going to kill that order. And on my Raptor, I'm going to cover above this swing high. So I'm going to disable my stops just for the moment. And I'm only running a single, so I'm going to see if we can't take advantage of a larger move here, if we get one. All right, so notice now how I actually wanted to enter on the hash mark. The market moved too quickly, brought me in on the low. What I would have done had this already broken, I would have tried to wait out the change and entered below here. So we'll see if it tags me down here, then I would have been filled all the same. But what I wanted to show you is notice how we have this swing point here. This is the sellers stepping up. So I'm a seller. This is, to me, their last chance. If the sellers can't put something together from here, then it's probably time for me to leave. And this will help minimize my risk exposure also. So rather than take the larger hit up here for 200 or whatever it was, I'm taking a few dollars out of this trade. Okay, so let's see now, had I held my stop up here, would that have been enough to hold me in this market, or would I still have been stopped out? In most cases, if I get stopped here, I'm going to get stopped up here also. Okay, so while we let that percolate, I'm going to see, okay, we're getting a green bar sell signal now on the hawk. Oh, here's soybeans giving us a first micro-macro cross signal also. So nice opportunity here on soybeans right at the low. Soybeans definitely in a downtrend. I don't think there's any denying that. Oh, and of course it's quarter to the hour. Woohoo! My least favorite time to trade. And an interesting looking setup here in crude oil also, where we're working on a green bar sell. There we go. We have the green bar sell. I'm going to trade the failure. I'm going to look to buy the green bar sell. And that's because we've already had this little hook in here. This may turn out to be the test of the extreme. Notice how they tried to sell it. Very little follow through. That might lead to a little bit of a pop-up higher. Now, of course, you can always use the green bar sell as an early warning, right? You don't need to jump in right away. Chances are, if this market is changing trend, we're going to see a first micro-macro cross buy signal around here somewhere. Oh, they slipped us a tick. Let's see if I can get it back. And crude oil, of course, insanely expensive market to trade. I think we might be a little bit more aggressive with our stops here. All right, so let's put crude oil away. And getting a comparable green bar sell failure signal here in the NQ, which seems to be lacking a lot of direction. Is that where I want to buy? 44, 47, sure. I am going to dial down the risk amount a little bit though. Sometimes the nice thing about these types of signals is that you can cover them below obvious swing points. And in fact, you know what? The market, there's so many yellow bars here, I might just throw a onesie on it. If it goes, it goes. If it doesn't, well. So here comes another green bar sell signal. Actually, it turned into yellow bars. How many do we have in this consolidation? 1, 2, about to get 3 if it ticks lower. That would be a 3-arrow consolidation. That would put us on the alert for that 4th arrow. Hi, Mick. Mick is asking, Eric, can you expand on why you said the CL is expensive to trade? Okay, folks, we got our 3rd arrow here. If we get a 4th signal, I'm going to reverse and I'm going to look at selling. Well, it's the tick value, Mick. It's $10 a tick, and it seems to be the ranges that crude oil makes. It always costs you so much more to cover the trade. All right, so we've got our warning dot. If we break the high, $44, $46. That's a little bit more aggressive. I should be entering above here. This trade is starting to fall apart on me. In fact, what I might do is set up for the sell. So this is now a 4-arrow consolidation signal. The only signal I will take on the hawk off of yellow bars. Not the best looking trade today, folks. If you're following my trades, this one, well, it's only, less than $100 risk. I suppose it's worth a flyer, but it is far from an ideal looking trade. See all these yellow bars through here? This is telling me this market is going sideways. See the filter? This market has not broken out of its range yet. Okay, back to Mick's question. Crude oil, it's just the way that it sets up. You see, I can take a trade like this here in the NQ for less than $100. If this were a similar setup in crude oil, we would be looking at probably $200 risk, or at least probably $200 risk per contract. So even though crude oil is $10 a tick, it doesn't compare to other markets like the Russell or some of the currencies which are also at $10 a tick. It just seems that the way the trades get structured, especially if you try to cover above swing points, it gets silly expensive. I think I used the word stupid expensive, which is pretty accurate too. And then if you are position trading crude oil, the margins are insane. I haven't checked what an overnight margin is lately, but it was in the neighborhood of $9,000 per contract. Okay, so our 4-arrow consolidation working out for the most part. Not to panic if you didn't get in. We should get a first micro-macro cross signal, and we should see some sort of reaction to the breakout below the lows here. Probably a good time to get this trade to break even. Well, it certainly makes me wish I had taken 2 contracts now, because it would make trade management a whole lot easier. This is the other problem with trading more expensive instruments like crude oil or the E-mini or some of these other tools that people get really excited about. How do I manage this trade now? You see, the more expensive instrument gives me the higher tick value, sure, but it also makes management very, very difficult. If I had taken 2 contracts here, I could easily take profit on one, bank, $100, $120, and then leave the rest in as a runner. But of course, that's not an option. Okay, here comes this first micro-macro cross signal. However, you might want to be cautious. It could develop into a macro pullback signal, so let's be a little wary of where it's setting up. Okay, I'm going to squeeze this trade just a little harder, go in above the highs. Okay, well, that's okay. Nice little move there that we were able to take advantage of. I think the NASDAQ is going to be bearish today. I think a lot of people are looking at opportunities to ditch on the NQ. Okay, here we get that. Oh, look at this. Good example of a situation where I was too aggressive with my stop. I took a small loss here, not a deal breaker, but had I held my stop, look at that, I would have hit my profit target. So rather than lose $100, I would have made $100. Oh dear, this market is trendless today. First micro-macro cross signal that did not trip. Came back here. I thought we were going to see a macro pullback signal. Look at how big it's retreated right back into this larger trading range. This trading range that we saw, kind of the lows of it being right here. The highs of it being, well, sort of here. Just look at wherever you have all these yellow bars. That's going to show you your trading range. Now they're testing the top end. Wow. This always makes me wonder if there was a Steve Jobs sighting somewhere. Steve's not really dead. Poof, there goes the NASDAQ like a rocket. All right, I know we've just had this enormous run up. I know we've broken all these trend lines that we had posted here. I don't know how aggressive I'm going to be on buying. We'll see what kind of buy signal we get. If in fact we do get a buy signal. Well, we're getting a warning dot for our first micro macro cross here on the hawk. And I think it seems pretty obvious that we're not heading higher, or pardon me, heading lower. Maybe this one is worth a onesie, just after I said I wasn't going to do onesies anymore. Play with the $100 they just gave me. Suncom says the jobless report is much better than anticipated. Well, that's good. Okay, you know what, folks? I am going to cancel that and hold out for a better looking setup. Why is this not a good looking setup? I know you're saying, well, Eric, it's the first micro macro cross. You say these are high probability setups. Why are you not taking that? Excellent question. Glad you asked it. We haven't really seen a test of the extreme, right? Yes, the market has shot higher, but it would be a stronger setup to me had I seen the market test the extreme somewhat, then come and now give me a first micro macro cross. That I could get behind. The problem with the first micro macro cross where we are right now, it's not that the first micro macro cross may not work out. I'm confident it will work out. It's where do I cover this trade? You know, if I take it here, knowing that the market can make a test of the extreme, well, where's the extreme point? Way down here. Now, you know what? We're in Sim, so I can show you this. Let's look at this first micro macro cross. I'm going to cover it on the swing low. I'm going to show you what I'm talking about. Okay, we'll see if they bring us in now. have had a little bit of a retest. I've drawn the resistance line right there. Whether or not it's going to be accurate is hard to say for sure. That's a little bit of an eyeball. Okay, so here's our first micro-macro cross. Now watch it make a liar out of me and just go to the moon. The danger here with taking the first micro-macro cross where I did is that it's going to want to retreat against me. So we're about halfway to the profit objective first now. Our first profit target is $50 per contract. We'll see if we hit that before we get a reversal. And in fact, I'll throw in a $50 target so we know where it is. Now, I have a friend who, when he hits 8 ticks, rolls his trade to break even. But I'm trying to make a point here, so we'll leave things as is. Okay, so you see we came a tick short of our profit target. The market, that's because, Eric, you entered late. Okay, had I entered on the hash mark, we actually would have hit our high probability target, but whatever, I didn't. I'm trying to illustrate the point that there's a very real possibility here that we're going to see a macro or a test of the extreme before this market actually reverses and heads higher. I've mentioned before, and you may have heard me say this, that the swing high lows are the most fundamentally sound stop placements. Okay, so here would have been the issue for us. If we were looking at this here, okay, there's the real possibility that we're going to see a test of the extreme. Yes, first micro-macro cross. Had I taken it right on the hash mark, it would have hit our high probability target before the reversal. But in all honesty, I probably would have managed the trade this way anyhow, taking it above the high. So it comes up a tick short, starts to reverse. Okay, now here's the macro pullback signal. This is a signal that is starting to look more inviting to me now. Why? Well, because this is starting to resemble a test of the extreme. We haven't filled the macro pullback signal yet. We're still printing warning dots. We did get a triangle hash mark here, but it didn't go high enough to engage the order. So rather than enter where I did, I would actually have a better price to buy at. I could buy right here. And where could I cover this trade? Well, a lot of times I'll look at the macro line. I'll look where the macro line turns for a possible target. I could cover it right there. So I could get in, have better parameters, risk the same amount, and maybe take 2 contracts here instead of just a single, which of course opens up a lot more opportunities. My profit target would be just a little bit above here where I actually entered this trade. So my profit target, a lot easier to get to. You know, there's a lot of things in favor here that I didn't see when this was printing. Right? Can you see some of that? That this one is looking a little bit more attractive. It's not to say the market can't peel off from here either and head lower still. You know, if I were a fib trader and I throw a fib line on here, what are we looking at? A 38% retracement. Not something that get fib traders overly excited. You know, a move like this, you would anticipate at least a 50% retracement, but we'll see. We'll see how it plays out. It is a macro pullback signal. Opportunity here in soybeans. On the Eagle, we're getting a with trend signal. Can I cover it above the high? I can. Speaking of sounder stops, okay, back to the action here on the NQ. All right, so now we would have bought. It would be long. And see, we're almost back to break even, and yet we would have been very close to our first profit target. Certainly close enough that if I chose, I could roll my stop below here. Come on, get up there. I'm trying to prove a point here. Good morning, Joe. Anyways, you guys, hopefully you see what I was getting at there. Why a trade like this macro pullback, there we go. We just tagged our profit target. Why a trade like this macro pullback was in fact even more attractive than this first micro-macro cross. Now both of them, like I say, had I taken them both on the hash mark, both would have worked out. And if I run, a stop below the extreme point, I'm almost guaranteed to hit my profit objective. However, that's, oops. Oh yeah, okay. The swing, we'll go with that. I thought I did something wrong there for a second. This is a substantial swing point now, according to the parameters I have set. So the market is saying, yeah, time to roll up your stop. So now I've got $100 in play. rather than already having my $100 in the bank. I've still got $100 at risk, which is not quite as desirable. I cannot believe the strength of this market. In fact, you know what, guys? I'm going to double my profit objective here because I only have a onesie on. And the other thing I could do, if you were looking for a way to add to a position, you would add right above this high, the one that we just took out. And once you add to that, then you would bring your trade to break even. So that, okay, let me explain. Let's get that out of the way. If you were in this trade with a onesie and you were looking to add to your position, this is a place where you want to add to your trade. Normally you add above swing points. And the reason is if you breach the swing point, it's a good place to suspect buyers are going to get more active. Sellers obviously are going to become more active. But traditionally, this is a place where you add to a position. Now you can do the opposite. You can wait for the retracement and then add to your position. But if you choose to add to your position above a breakout, you normally get your trade to break even, and that way all you're risking, oops, wrong tool. That way all you're risking is this portion right here. Right? Your trade is at break even, you've got a new open contract, you're risking this amount, which in this case looks to be about 40 bucks, 40 or $50. Now sometimes you can be penalized for your aggressiveness. It looks like we're just about to get tapped here. All right, so where would be an alternate place to add to your position? We were long from down here. A lot of people are going to start shooting trend lines. Now, if the market starts to turn and builds on this next signal, let's say it comes up here, they'll add to the signal here, and the logic is the same. They'll bring the trade to break even and then get into the next position. So let's see how that would work. So rather than, we're not going to enter up here anymore. We've shot a trend line across the bottom. Oh, we're getting another macro pullback signal. Looking for the market to recover. So right now we would be entering here, bringing the rest of the trade to break even. Now we're into yellow bars. We really wouldn't do this off yellow bars, but we're going to pretend. Okay, so we're entering. Now we're long 2, and we're going to be a little bit more aggressive with our stops. Do you see the management difficulties that you can encounter with all these different methods? Like sometimes, honestly, easier is really just the way to go. Just keep it simple. Let your risk tool determine your position size. If you want to run a target, say we're going to take half our position on target. The trade would end up, okay, see we're getting lots of heat here. Let's just clean this up a little bit. I'm going to show you the simpler way. right? Just let your tool do its job. So you enter here, you cover here. All right, you can only get in with 1 because we're only risking 1%. Let's say we risk our 2%. We should be able to get in with 2. Oh, we're actually in with 3. Okay, so we take profit on 1, bring our stops up either below the swing or even to break even. I'm a fan of break even myself, and just see what else we can get out of it. In this case, not a whole lot. But honestly, sometimes simpler is better. Especially if you're only risking 1 or 2% of your account. Like really, it's going to be hard to go wrong risking only 1 or 2%. Look at this, the NQ working on maybe a trend change signal here. Our trend line is flipped over anyway. I'm not getting too excited about that just yet. Boy, they're quiet. Maybe I should be getting excited about it. We do have a double dot, and with the double dot signal, this is one that we don't deal with very often on the Falcon, so it's a good time to point it out. The double dot is our counter trend signal. And the nice thing about the double dot signal is that normally you can cover it right above the highs. And now, because it is counter trend, I tend to be more conservative with it. I tend to risk less. But the real big deal with the double dot signal is I always look back in the history of the chart and look to see if there was a reactionary move at this level, and if it was, how big was it? Well, you can see it was fairly substantial. So this, the market's actually trading above. I get a chance, we'll see here if I get a chance to simulate this double dot signal if the market comes down a little bit from here. And brings us in, I can simulate what it would look like. I don't recommend that you chase entries like this. I'm just trying to pretend that we entered at this price when this hash mark printed, that I placed the double dot sell signal, and then we got filled on this bar. Now the market came down, it's coming up a little bit of reaction to this buying going on here, not a real surprise. like I said, the nice thing about this double dot signal is you know where to cover this trade. Right? We put it above the swing high. It gives us the opportunity to formulate a rather tight or tighter trade by going above this swing high. Because obviously, if the market trades above this swing high, we're on the wrong side of this position. But yeah, real tug of war. Tried to go lower, didn't. Tried to go higher, and it's starting to fail going higher. So we're working also now on our proper trend change signal, where we have the down, trend line changes color, here's the up, and we're starting to come back with the down. Now the actual signal will probably end up printing somewhere here near this 44, 45, 44, 46 area. All right, let's throw that on the shelf. The NQ actually getting more aggressive again. Here on the Raptor, we're seeing a buying opportunity. Oh, come back. So some conflicting signals now on our tools. And here comes the eagle with a buy signal. The place to buy is above this high, so we're going to print very close to the high. That's where we would want to get into this trade. And again, a situation where maybe, just given the way the market is reacting today, maybe 1% is more prudent than risking 2%. Oh, look at that. Trade Forecaster says we're supposed to be in trend mode for 107 minutes. So there's that trend line we were looking at earlier. Joe asks, what do you do when you see conflicting signals like that? Well, Joe, if the signal looks promising, like here we're getting a trend change signal on our eagle. It looks like it's setting up to go higher. Certainly if it gets above this high, it should carry some momentum with it. Then I will dial down the risk amount and place the trade. What concerns me about this signal is that we've encountered the hard edge, but we haven't really seen much of a reaction. So once again, all the more reason to dial it down. I tend to run larger stops if I can, also to give the market a little bit more wiggle room. And last but not least, you can always just flat out avoid it. Right? You can just avoid the signal altogether until you get something more palatable. Just like we did with the first micro-macro cross that I showed you here. Right? We could take it, but because we hadn't seen a test of the extreme, I felt I had to run a very deep stop, maybe at least down to there. Dial down the risk amount, run a deep stop, take your profit when you have it, and all is good. Or wait for a better looking trade, knowing there should be a test of the extreme. The market comes down. This looks a little more like a test of the extreme. We go in, we can perhaps cover it a little bit tighter, take our profit, bring our trade to break even, and take our profit, bring our trade to break even, and either manage the trade a little tighter or get stopped at break even on the balance. That's why when we're in this room here, I always try to highlight the better looking trade scenarios for you. Here we're getting, again, a first micro-macro cross. We do have the higher swing low, so this is looking a little bit more bullish. Would I take it right on the hash mark? No, probably not. We're seeing a second push on this entry, right? The market tripped, engaged the signal, it's retreating. I would certainly enter above the high of that, cover below here. Risk 1%? Sure, I could live with that. Maybe go back to my swing high-low model. So for $140, that's not an unreasonable looking trade if this market is prepared to head higher. And I'm covering, below obvious support. Dustin's asking me about a couple of tools that he's interested in. No, Dustin, I haven't had a chance to look at them in conjunction with DTS yet. You're going to have to give me over the weekend to play with it. I've got a lot of emails to catch up on. See, same thing here with the Raptor. If we're taking this Raptor signal, I wouldn't necessarily take it on the hash mark because the sounder entry is up here. I would run a deeper stop below the swing lows. I have my profit target. And why would I not enter here? Well, just because the market it doesn't appear to have much direction to it. Right? It's obviously going sideways. It's obviously chopping about. It looks like it's trying to go higher. Excuse me. Let's see, we got Jim's handy dandy little first hour high marker. We're struggling at the first hour highs. Okay, well that kind of explains why we're drying up a little bit here. Okay, I got a chance. I didn't think the market was going to come back and give me this number for this double dot. It looks like I'm going to get a chance to show you that double dot now. All right, so what did I do here? The market came up, flashed a double dot signal, right? This is our counter trend signal. I don't trade double dots blindly. I always look back in the history of the chart and I say, oh, okay, there was a reactionary high right here. There was a decent reaction lower. Maybe we're going to get another one. The nice thing about the double dot, of course, is where you can cover this trade. I can enter on the hash mark. I can cover the trade above the high. Why is that significant? Well, because this tells me very plainly if the market trades above here, I am definitely on the wrong side of this trade. So the market comes up and it tries to threaten the stop. And now it starts heading lower again. So now we're going to see how this double dot signal actually plays out. And now that we're in it, as though we had entered it back here. Now, I wouldn't normally do this. If I missed this move the first time, I would probably wait for the proper trend change signal. The down, the up, the down, the signal would probably generate somewhere over here, and then I would sell it. All right, like all our counter trend signals, you can use the double dot as an early warning that the trend might be starting to change. Right, you can see we've got some issues here. We're getting a red bar buy. So let's scrub this order because this is no longer a legitimate order. The red bar buy, also our counter trend signal. Oh, see, now they're going to run the stops again on the high. And like the other counter trend signal, you can treat this as an early warning. Right? You don't have to take it here. Oh, look at these guys. They're really beating it up. The eagle, the only one that hasn't really changed direction. The eagle's still looking bullish. Now, I don't normally take one long, one short. If I have an open position, I'll probably, if I'm going to take another trade off of another signal, I will take it in conjunction with in the same direction. So if I'm already short here on the Falcon, I'm not going to go long on the Eagle. At least not in exactly the same place. Because unless I've separated my accounts so that I have different accounts for each bird, I'm going to offset my positions without intending to do so. Okay, the NQ definitely looking stronger. Wacky market. Crazy market alert. With the Raptor, I should throw a runner in too. All right, you guys, if you are looking for a signal, it looks like a buy above these highs. It could be a good trade. So this Eagle trade showing some promise. They've been beating up on this level for so long. See, we've got that same level right here. Once we get above there, we're probably going to see a run, at least to the high here around 44.60, 61. I think that's very feasible. So once again, a higher probability looking trade. And, counter trend trades. There's a reason you don't see me do counter trend trades very often in the room. Joe is asking, how do I change my account in Trade Manager? Let me see here. I'll bring over soybeans because we don't have, I know what I can do. Okay, we're going to cancel this. And we're going to flip that. Okay, so you go to your strategy window. You highlight your Trade Manager. You turn it off. So you go here to enabled and you go false. And now you go to your accounts and all your accounts are going to be listed right here. And so you choose whatever your account will be. Right? And then you are working on that off that account. Then when you have your account selected, you go back to true, click apply to enable it, and you should be displaying your account across the top. If you're having trouble getting it, it may also be that you are, if you go here to your control center, make sure you don't have global simulation mode checked. Oops, I just checked that. You want that unchecked. Sometimes that will lock you into sim and won't let you access your account. Well, the seller's not giving it up entirely. We do have this market between the proverbial rock and a hard place. Dustin's asking a good question. He says, when you're adding positions, are the buy market, sell market buttons the only way to do that? So if, for instance, we were currently long on this red bar buy and we wanted to add a trade up here, do we need to wait for the market to trip up there and then hit the buy market? No, not necessarily. What you can do, Dustin, is you right-click on your chart and then you add your buy order. This is just using the chart trader feature of the NinjaTrader. And the Trade Manager will adjust your stops accordingly. when you add to it. So if you add another position here and you already have an open one, it will change your stop setting to 2. And the buy market, sell market buttons work also, but no, you can add to it by right-clicking and selecting your order. Boy, oh boy, everybody go home early. Jeepers, where'd they go? We might have to wait until this afternoon to actually see the market light up. Yeah, like Joe says, they took their money and ran. All right, things starting to look a little bit more bearish again. You know, all this waffling, you should not be surprised. All you need to do is look at your hawk, and you see all these bars flip-flopping all over the place. I'm already short on the Falcon, but this red bar buy failure gives us pretty much the same opportunity as what we're seeing in the Falcon. Remember, it is a counter trend signal. Remember, you can use it as an early warning. If this market turns over, we're almost guaranteed to generate a first micro-macro cross signal, probably somewhere around 44, 45, 44, 46. You never need to rush to get into a trade. I know yesterday we saw the market break the trend line and fall off without giving us a clean signal. The market did come back in the afternoon though, right back to the same level, gave us another sell signal, so you had plenty of opportunity to get in a second time. Yeah, I'm quite surprised at the conflict in signals this morning across the birds. It's not usually like this. Well, you guys know, you've seen it. Normally things remain in sync. In fact, here on the Falcon now, we're getting a late filter entry signal. You see this? So this is actually going to turn into a buy signal. There you go. And we know the late filter entry tends to be a fairly reliable signal. So we're going to get stopped out there. However, our Eagle trade and our Raptor trades are about to get engaged. All right, so there we go. A little bit of a slip. Little slippery. Let's see if we can't watch them run it up now to 44.60. I'm thinking that's the next target. That's going to be, well, our primary resistance is 44.56, and the next line is 44.62, so maybe we'll aim a little higher, go 44.62. Okay, buyers, where did you go? Oh my gosh. Okay, here's our first micro-macro cross signal now. Oh, no, there we go into yellow bars again. Oh, look at this. Is this crazy or what? Well, I wish I could say this was good news. This market is printing far too many yellow bars. In fact, if it wasn't for the trading room, I would be packing up my toys and going somewhere else. There's no direction here, no commitment. Yeah, like Joe says, directionless. Yeah, Denton says, it's mixed up as a dog's breakfast. Yeah, ain't that the truth? No. And you know what? That it's part of the danger when you're sitting here, right? You're sitting here, you feel like you should be doing something. I suppose doing nothing is doing something. Yeah, see, there they go. Just full on reversal now. No, I'm not playing anymore. I know it's still early, but unless you guys have any questions or anything like that, this is not a day you want to trade. The market didn't, well, we had a little follow through here to the upside, off of our better signal. You know, when we held out for the better signal, this signal should have moved, taking it through these highs. All the selling that was up here, this should have had some follow through, and instead the sellers just beat them up, force them all the way back down here, and now look. We break the lows, and guess what? No follow through. Right? The buyers and the sellers, they're just playing with us now. They're letting the low break, and then the buyers jump in. They're letting the high break, and the sellers jump in. Yeah, like Joe says, they're playing tag. And the moment we think we get wise and we start buying down here and selling up here, that will be precisely the time that the market goes boop, like that, right through the bottom. So not, like I say, not a day we want to be here. Unless anybody has any questions or wants me to take a look at something, I think we're just going to close up shop and call it a day. Yeah, like Dustin says, there goes my $1,000 gain. Exactly, Dustin. You know, it's maddening. It is. Like we had a nice signal here on crude oil earlier, right? We took our crude oil trade. It hit our profit target, but look, even crude oil hasn't been showing us a whole lot. Soybeans continue to waffle. I'll nurse that trade back to break even and then pull the plug on that one. But yeah, I think it's just time to close it up. Close up shop, call it a day. If you are going to hang out and trade today, I'm thinking, well, wait for the market to get outside of this range. You need to let it get outside of this range regardless of what kind of signals you're printing. Get outside of this range, look for that retest, and then sell. I'm thinking down is going to be the direction du jour, but you know what? The way today is, who really knows? If we break to the upside, look for that retest and then buy. But I think I'm going to phone and see if I can get a tea time. Time for moonshine. I might hold off for a few hours yet, Dustin, but you're probably in a different time zone. Go for it. All right, you guys. Have yourselves a wonderful weekend. I will see you again on Monday. And I think the daylight savings time this weekend. So, oh boy. I'll be in good shape come Monday morning. All right, you guys. Talk to you then. Bye.